How to get a $70,000 loan for business fast with bad credit and no collateral, plus 0% interest for 6 to 18 months. I will be showing you all of this and much more in this video. So you'll want to stick with me until the very end on how this 0% interest works, startup / personal loans, business loans, and so forth. But before I get started, my name is Michael from Viral Funding Solutions, and no further introduction. Let's get right into this. Perhaps you were searching for, hey, how do I get a loan for an auto loan or a home loan, etc. This one is a focus on business funding, as well as how to do things like building business credit and so forth. Now, I want to go in through some of these laws, quote unquote. Perhaps you've heard me say this in the past, but let's revisit it. So you can get 10 to 15%, and in some cases up to 20% of your annual gross sales. More in that like 10 to 12% is what happens on average. I won't say that is going to be definite for your situation, because there are individuals who make less, people who do more. They have this type of details. They have these types of constraints and so forth. So everybody is in a different situation. And yes, revenue is a huge factor when we're talking about how to get a $70,000 loan for business, or a $40,000, $50,000, $100,000, $1 million, $5,000, and so forth. Without collateral, cash flow is very important. And what that entails, and I'm going to be getting into in a moment here, but we look at consistency on a month-to-month basis. So if we looked at the last 3 months of your bank statements and we saw what is your average daily balance, how much are you depositing, how many times, the amount, the frequency of it happening within the last 90 plus days, we want that to be like up there. And usually what we look for is about 3+ deposits on a monthly basis. The more, the better. And so it depends on each person how you're collecting payments. But if you can change that up so you can put more deposits into your account, that would be best. I have individuals who go, well, I don't have collateral, or I do, but I don't want to put up my home, and I don't want to have to put up this. They don't even consider that to be collateral. I don't have enough equity in this. This property has to be given up, but it's not enough. The appraisal, I can't do this cash out refinance situation. I don't have a commercial property, a real estate investment property, and so forth. I hear it all the time. Or perhaps you don't have accounts receivables, unpaid invoices, inventory, and that list goes on and on. And perhaps you do, and you just don't want to give ways with that. And so this is going to be very helpful. You've been denied by the banks. Like I tell people, if you can get approved through there, go there first. And if you don't want to, but you can get approved because you see an alternative where you don't have to put up collateral, perhaps the rates may be more medium to high. But what I tell business owners, at the end of the day, does your benefit exceed the repayment? You might be paying $2,000 here with the bank per month. Over here, you're paying double, if not triple, $6,000, $7,000 and above, and you're getting less time, perhaps because this isn't like the wild, wild west. We have private lenders who will give you money, and these investors and so forth. So they have to make sure they're getting their return. They're getting their money back. That's what I'm saying. And so it may be a little bit more, quote unquote, expensive, because that's what alternative funding can be. But if you're going to take that and you're going to increase your growth and expansion of your business, the ROI is going to produce to you something in the immediate future, perhaps in the long term, and or then it makes sense. You're going to be doubling, tripling, quadrupling your bottom line. And you have to think about that. And there's even survival case money, but those are more for like a line of credit and so forth. And I'll get into that in a moment for cash flow reasons. So those are the laws that really govern how much you can get approved for. So now we're talking about how much can you get approved for if you do a certain amount of monthly revenue on these monthly sales. So there are cases where you can get up to 75% of your average monthly revenue, 75 to 200%, 75% up to 150%, 50% to 150%, 50 to 100, 40 to 60, and then 20 to 25%. And that all is a determinant on how you're doing revenue-wise, as well as things like your time in business, your FICO credit score, background checks, bank statements. Like I said, average daily bank balance, the number of deposits, how frequently are you depositing? You don't want to deposit 1 month. You only take payments twice per month, beginning the first day and then the 15th. Those are 2 deposits, but we're requiring you to have 3 and above, if not 5 to 7 plus. So you have to look at it from that point of view on how you're collecting your payments and when they're being collected. And so the more the better. Don't have 1 month where you say you're doing 60,000 a month, you deposit it at the end of the month 60,000. Then the next month you're depositing it the same, or you're doing 40,000 at the beginning, the 20,000 there. That's two and one. That's 3, but you can't combine those 2 like that. Consistently every single month, 3 and above, if not 5 and above, is best. So look at it from that point of view. And if it's fluctuating way too much, like, hey, I'm depositing 5 to 7 times. What are you talking about? What business owners don't understand is, yeah, I'm doing 70,000 a month and I'm depositing it frequently more than 3 times, but it becomes very low 1 month, or on another month, it's just one big payment. Now you're doing 70,000 and then you're doing 40,000 and then now you're at 30,000. So now you're depositing only a few times or as much as you did before, but the revenue has dipped. Too many fluctuations. We want to see projections going up. It's even better. And if it's less, it's okay. We can still help you out. So term loans, these are the ones most people end up wanting to get, where you can get between 1 to 2 years or up to 10 years. And a lot of the cases, when we're not talking an SBA government-related loan, which I've made content on, like the SBA 7A and 504 programs, you may qualify for those. That I'll leave more information down below in the description. But term loans that are unsecured, 1 to 2 years, as much as up to 10 years in some cases. And the more up you go, usually 7 years or so is for working capital, business growth and expansion, payroll purposes, anything in that matter, in that sense. Up to 10 years, a lot of it can be for the use of equipment, but it can also be used towards working capital. But just know that you don't have to put any collateral in that, but you do have to meet the right funding details. And this is why it's very important that you guys understand, I need to get better time in business. Primarily, a year's worth is good, but 2 years is better, if not 3+ years, with everything happening, inflation and so forth. And we're talking about, to be an A paper tier lending client, like somebody who gets the best interest rates and so forth, you're looking at getting 70,000 or another amount. You want to be doing at least 50,000 a month on monthly average revenue per monthly basis, however much we look at it, being consistent over the time. And at least 2+ years in business with a 700+ FICO to get the best rates and interest rates, and it can vary depending on services. But you can see term loans 1 to 2 years or up to 10 years, 1 to 3% interest per month for unsecured without collateral. That's what it means. And before I go into the secured with collateral, so 1 to 3% interest per month for unsecured without collateral is what you could expect for these types of term loans. It can be 1 to 2 years up to 10 years or so. And this is a non-banking solution. So if you possibly qualify for banking solutions, I'll leave you an online banking route you can go through where rates can vary. They can be between 6% up to 30% or so, prime rates. And then we're looking at other calculations. You may not have to give up sufficient collateral, if any. If you qualify for a physical location banking and you're looking for an online one that can be much faster with minimal documentation, I'll leave information for it down below in the description. For those of us who do have other alternatives that cannot qualify for banking solutions, let's continue to look for this right here. So if you think about it, 24 months, 2 years, 24, depending on the interest rate you get. If you get 2%, depending on the risk of your business, it could be the industry, the amount of debt you've taken on, do you have any existing loans, cash advances, and much more information that we're looking at, the activity in your banking. So if you got 2%, that's 48% interest for 24 months or 2 years. So can you take on that amount of interest? You may be thinking to yourself, no, because you truly understand the financial structure, or you're saying no because you're seeing all these other people are getting like 5%, 3.7, 5%, 15%. You don't really understand, though, their situation. You have to stop looking at what they're doing and think about your own business and assess your own risk. Like I said, taking that funding, is it going to hurt my cash flow? Will it help it, keep it stable? Am I in a position for growth and expansion and I need to hire more staff? I need to buy more equipment, my landscaping business. I'm going to bring on more people. That's going to triple my profit. I'm going to go from 70,000 a month to doing over 120,000 a month. Boom. Or something like that, right? You got to think about the positioning of your business and where it is in the future, as in the short, middle, and then the long term. And if it's not going to produce to you an ROI, such as like working capital purposes, but it's just going to just for like a general maintenance or other purposes, you're like cash flow positive already, it could still make sense to you. Don't think about it as only being a return on your investment. But if you're already insufficient revenue wise, then it will never justify it. And perhaps a line of credit would help, but you still have to qualify for it. So, and then there are other options. So secured, it's prime rates, which is 4% right now as I'm bringing out this video, plus 2 to 6%. So you're looking at about 10%, and even in the early teens, assessing the risk. Lines of credit equals prime rates, 4% plus 2 to 8%. With the secured line of credit against receivables, there is no set payment. So we want to primarily look at these unpaid invoices when we're primarily talking about receivables. And so can you give, what do you have first and foremost? How much have you accumulated, if any, in accounts receivables? Well, I have 400,000. Okay, well, we can lend up to about 95% or so of aging receivables. And we have to, again, look at all of that to assess how much we can actually get you. But and that number percentage can vary from time to time. And so usually we want to look at getting you these accounts receivables when you're giving up some type of a collateral base. Unpaid invoices is primarily the best. There are other forms of real estate and so forth, perhaps with these term loan options. But it's not always like we're asking for equity or property to pledge this as collateral and so forth. So it just depends on the lenders and the program that you go through. So over here, we have you pay up front fees for this secured line of credit where there is no set payments to set up the line of credit, which is LOC for short. And then you pay that rate when the money is then collected, which is normally what you do within 30 to 90 days. Now, there's another product out there in the space where you can get a $70,000 quote unquote, it's not a loan. Technically, it's a cash advance. It's basically based upon your future sales. So whatever you're making in the future, you know, you get taken out a future percentage of those credit and even debit card receivables. And so that's what it's based upon, projections. And then there are hybrids where we're not taking a future percentage of your credit card receivables. It's called the hybrid merchant cash advance, which is something that I strongly recommend. And this is where you want to have at least 3, if not 5 to 7 deposits, where we're going back into this hybrid. 1.19 to 1.69, or it can vary at 1.19 to 1.49 is what you would expect the rate to be. So what that means is what kind of risk, first and foremost, do you take on? And what is your funding profile telling us? What is the strength of your business? And depending on that, you'll be assessed a certain risk and a certain rate. And so when I spoke about if you want a $70,000 business loan, going back up to this, think about, before I give you some numbers there, what you could get approved for. So you can get approved, some cases 75% to 200%, others it could be 50 to 150%, 75 to 150%. A lot of the times people fall into that 75 to or 50% to 150% range. But to be getting that amount, you have to be doing at least 15,000, and if not 20, 25,000 and above, some cases 30,000 in revenue to be given a chance of 50 to 250% of what you can receive. But if you're doing less than that, let's say you're doing 5,000 a month, then you can only get up to, in most cases, up to 75%. The 20 to 25% comes into the self-employed 1099 non-W2 funding, where you are doing at least 3,000 a month in the last 3 or so months. And then there are other cases, which I'll get into the 0% interest, but that is more for business credit card building. So over here, you get, let's say, you're in the 1.19 to 1.30 range is what the rate would be for you. And we determine that, again, based on, for this example, if you're doing 50,000 and above, 2 years in business, you have the FICO credit score of at least 700 and above. And you say, and we look at everything, the bank statements and so forth, we might not even need to look at tax returns. Sometimes if you're asking for over 100, in most cases over 150,000, we'll look at the most recent tax return and year-to-date financials. That is the profit and loss statement, as well as the balance sheet. So for this example, 70,000, you can supply just as little as 3 months of bank statements, 4 to 6 months, depending on who's looking after it, the lender and so forth, as well as a voided check and copy of your driver's license. And that's pretty much all that's needed for $70,000 cash advance / loan in some cases. So 1.23 total payback is what we assess to give you the rate after all the underwriting and what we determined. So what you're paying back is 86,100 from that 76,000, from that 70,000 originally that you qualified for. And to a lot of people, they think it's 86,000. Well, what are my terms? What am I getting? Well, let's say, for example, you do have consistently you're doing 70,000. You can be doing 60,000 and be getting 70,000 as well. Like I said, that's 75% to 200% range, and we have to assess everything. And so you're getting to pay back 86,100 as a repayment. Sure, we'll look at now what that cost entails per day, per week, per bi-week, and per monthly basis. But before that, you have to understand that if I'm paying this amount, what are my terms? Well, what we look at primarily is how much time in business do you have? What is your revenue? And it can be a little bit different than how we calculate the rates, the interest rates to give you. So the term can be dependent on those things too, like time in business. Instead of 2 years for the rates, we'd like a year's plus worth. For you to get the 1.19 to 1.230, you'd have to be doing 50,000 and above. FICO credit score range could be like 675 and above instead of a 700 for the rates. Anything else underneath that, we're looking at 25,000 and above, 15,000 and above, and so forth. And you can be in the B to C to D plus lending client category. So you got a 1.23. That's good. That's actually exceptional. So you pay back 86,100 as opposed to paying the most, probably 104,300. And even if you did, think about it. If you got terms of a 1.23, exceptional details here we're talking about. You got 18 months. That is amazing. And you got that, great. But if you didn't, let's say you didn't have everything and you were only given 6 months, can you pay back 86,100? Probably not. Probably you can, but the 1.23 wouldn't be there. Instead, you'd be falling in the rates of 1.31 to 1.49, which brings us down here. So if you got assessed a 1.37, then your total payback is $95,900 over the term that you have. Let's say it's 6 months. Well, you're like, well, I didn't even need that much time anyway. So I'm like, 6 months, I'm going to produce an ROI in 3 months, or even in less time. By the 4th, 5th month, I'll be doubling and tripling my income. So that payback of 95,900 on 70,000 I'm getting, 20,000 and above won't really matter because I'm going to be getting over 120,000. I'm going to be consistently doing that from there on out. But even if you got more time, you're like, well, great. But some people can't. They'll say, oh, well, I'm not going to produce anything here. That's just too much cash flow, and they don't go with it. But it's best that you understand your business very well. So the 0% interest for 6 to 18 months, that is through a form of like credit card stacking. It's a program where it's a hybrid line of credit where you can start off with 0% interest. And for those 6 to 18 months, use it as like bridge money. I know a lot of real estate investors do this, as well as any other type of business owner in any kind of industry. And you need money for real estate investment property. You're building a home or so forth, fixing, flipping it. And you're looking for that bridge loan, so to speak. But this is a credit line hybrid program where you're stacking on different business credit cards with different limits and different amounts. You can get up to 150,000. That's not tied to your social security number, more towards your EIN, not having to use personal FICO credit scores and all this. In a lot of cases, personal guarantees, but that's just a common thing that happens with everything. You have to have exceptional details not to have it, but in a lot of cases, it's just always going to be there. And that's just nothing wrong with that. And it's a way for lenders to guarantee that they can get their funding back going through personal assets if need be, a home, a car, etc. But that's what it takes for you not to default and to really understand your business and how it works. So not everybody will qualify. You need to have exceptional credit, or good to great credit. You have to be in like the 680 and above, minimal inquiries and debts and so forth. So I'll leave more information in that program down below in the description. But look through all these services. I'll leave more down below. Look through all the options. I'll leave one other thing too that I want to cover that I said I would. So we also have personal and startup loans, if that's what you were in here looking for, from 20 to 500,000, more or less. Term lengths here are 1 to 5 years. A minimum credit score. This is highly emphasized as the 0% to 6 to 18% hybrid line of credit program, but you have to have here a 700 experience score. Annual revenue of 500,000, or excuse me, 50,000. That'd be too much for this. Taxes or pay stubs, verifiable. 0 time in business, but you have to require at least 5 trade lines. So a lot of people, that's where they don't have that. Cost of capital or interest, low, 6 to 18%. which is something you would see kind of like with these online lines of credit banking solutions. So time to approve, 24 hours in 1 to 2 weeks. Usually you're getting it, the funds. Less than 35% utilization, minimal recent inquiries, strong credit history is required. No recent negative items standard. What you would need: an online loan application if approved, driver's license, bank statements, tax returns, pay stubs, utility bills. So that's a lot of the stuff that I can handle and broker for you. And as your broker/agent who's helped out a lot of businesses, I can help you better understand the positioning. But that is in that category of what you can do, as well as if you need help getting business funding. What I highly recommend, if you haven't done so, is fill out a questionnaire that I'll link you to down below in the description, where you're going to get a fully and highly customized email response that's very personalized as well on what your best funding option and options are. Thoroughly broken down. Introduction, the qualifications, how it works, bonus tips, bonus material, conclusion, and so forth on what I would do in your situation, what you should be doing, and how I can help you best. Unlike what anybody else out there will show you, it's very in-depth. Even if you don't qualify for something now, you'll be shown what that looks like and what are the expectations. What are we actually looking at for different services? Stuff that you don't see on a face value. Plus, you're going to get a free 6-step pre-approval lending checklist to show you how to get approved for funding much faster. So that'll be everything from me. If you have any questions, comments, or concerns, please voice them down below in the comments. In the description, all the information will be there, my website, my email, but fill out that questionnaire if you haven't yet. That'd be the best thing to do, the fastest way for me to get a hold of you. And if you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future videos I will be coming out with. If you did get value out of it, yes, please give it a thumbs up and share this with others, a complete stranger, friends, family, who you feel will get value out of this, who really need an education, like really need to get sat down and, hey, put a hand over their shoulder like I do. If you were sitting right here is what I tell a lot of people. Hey, how are you doing? How are things going with you? And I don't pressure you. I don't ever just jump into something talking to you about business. I want to get to know you as well. And I care for you in your life as you as a human being, first and foremost, you, yourself, your family, your identity, as much as you want to. I'm not going to be pushing and saying, yeah, show me everything. No. Okay. Don't get that twisted. Now, that'll be everything for myself. Thank you for tuning in. Talk soon.